Stellantis warns of $2.7 billion loss due to tariffs, Jeep makers' first-half results. Brace yourself, one of the world's biggest carmakers just dropped a financial bombshell that nobody saw coming. Stellantis, the powerhouse behind iconic brands like Jeep, Dodge, Fiat, Chrysler, and Peugeot, shocked markets by announcing it now expects to post a staggering €2.3 billion, $2.68 billion, loss for the first half of this year. The culprit? A mix of early U.S. tariffs and mounting operational challenges that have left even seasoned industry watchers reeling. But here's where it gets controversial: was this downturn inevitable, or could the company have handled it differently? Just picture it: shiny new Ram trucks sitting idle on dealership lots in Miami while their parent company scrambles to explain an €11 billion drop in 6-month revenue compared to last year, down from €85 billion to €74.3 billion. That's a huge decline for a business of Stellantis' scale. This preliminary update comes at a time when the company has suspended regular financial guidance, last issued back in April, which means investors and employees are relying on incomplete, unaudited figures to assess the damage. So, why the early, unscheduled peek into the books? Stellantis claims it released these numbers because analysts' forecasts and the company's actual results were wildly out of sync, suggesting the market was far too optimistic. And this is the part most people miss: new CEO Antonio Filosa, who took the reins unexpectedly after Carlos Tavares' sudden exit in May, following a dramatic drop in profits and slumping sales, now faces the daunting task of steering the company out of troubled waters. As news broke, Stellantis shares, traded in Milan, dipped another 1%, continuing a painful slide throughout the year and marking an eye-watering 38% drop year-to-date. Investors are clearly worried, and maybe for good reason. Let's unpack what's behind the numbers. The company highlighted 4 main reasons for the poor results. First, it initiated early cost-cutting and efficiency measures that, while intended to improve future profitability, led to significant short-term expenses. Second, Stellantis took pre-tax net charges totaling approximately €3.3 billion. Third, higher industrial costs squeezed profit margins further, and the company also faced pressure from volatile foreign exchange rates. Finally, and perhaps most headline-grabbing, tariffs imposed by the U.S. began to take their toll. According to Stellantis, U.S. tariffs alone cost them around €300 million in the first half, in addition to knock-on effects like having to scale back production. That's likely just the beginning. Chief Financial Officer Doug Osterman admitted the tariff impact could soar as high as €1 to €1.5 billion for the entire year. Think that's extreme? Some experts argue tough trade policies are necessary to protect domestic jobs, while others say such tariffs cripple global businesses and ultimately hurt consumers. Where do you stand? Adding to the woes, Stellantis' vehicle shipments worldwide slid 6% year-on-year in the second quarter to about 1.4 million. North America was hit especially hard, with sales expected to drop by 109,000 vehicles, or 25%, primarily because imported vehicles, those most affected by tariffs, were pulled back and sales to fleets dried up. Stellantis has promised to provide a more complete and verified financial picture when it formally reports first-half results on July 29. Until then, speculation will swirl: were these losses entirely out of Stellantis' hands, or could leadership have acted sooner to avoid the worst? Now, here's a question for you: do you think new CEO Antonio Filosa can turn things around, or is Stellantis facing a much bigger crisis that even bold leadership won't solve? Is the blame for these losses on international trade policy, or could mismanagement be the real story? Tell us what you think in the comments below and join the debate. Your take might just change someone's mind. Stellantis reports $2.7 billion loss, tariffs, restructuring, and slow sales impact. Stellantis has made headlines by reporting a staggering loss of $2.7 billion, equivalent to €2.3 billion, during the first half of this year. This substantial setback comes in the wake of tariffs imposed by President Donald Trump, alongside sluggish sales that continue to impede the company's performance. The preliminary financial results indicate the challenges facing Stellantis, which is the parent company of renowned brands like Jeep, Ram, and Fiat. As the results are set to be fully detailed on July 29, it is evident that the company remains entrenched in a recovery phase, especially after a disappointing performance in 2024 that culminated in the ousting of its previous CEO, Carlos Tavares. Despite falling below analysts' expectations, there is a glimmer of hope as new CEO Antonio Filosa takes the reins of the beleaguered automaker. Following this announcement, Stellantis shares in New York experienced a modest increase of over 2% in early trading hours on Monday, signaling some investor optimism. The company disclosed that its global vehicle shipments declined by 6% in the second quarter, with an alarming 25% drop in North America specifically. The narrative behind these results is one that many of you are already familiar with, Filosa conveyed in a message to employees on Monday. The first half of this year has been tough, marked by external pressures including tariffs, fluctuations in foreign exchanges, and challenging economic conditions. However, it is also a period of significant progress when compared to the latter part of 2024. For the period spanning January to June, Stellantis reported revenues of $86.7 billion, or €74.3 billion, a decrease from the $92.2 billion recorded a year earlier, though this figure still surpassed the revenue from the latter half of the previous year. The automaker also reported a staggering $3.8 billion, approximately €3.3 billion, in pre-tax charges this past half year, primarily stemming from program cancellations, provisions made for U.S. emissions penalties that are now resolved, and various restructuring expenses. It has been calculated that the tariffs imposed by President Trump have already cost Stellantis around $350 million, €300 million, prompting the company to adapt by reducing imports from Europe and strategically cutting down production rates at facilities located in Canada and Mexico. Chief Financial Officer Doug Osterman had earlier predicted that these U.S. tariffs could ultimately cost the company between $1 billion and $1.5 billion over the course of the year. Moreover, Stellantis experienced a cash depletion of $2.7 billion, or €2.3 billion, during the first half, highlighting the financial strain faced by the automaker. In light of these turbulent circumstances, Stellantis mentioned that these preliminary figures are being released without definitive financial guidance, which was put on hold in April due to the ongoing uncertainty surrounding tariffs. The complete details of its first-half earnings are expected to be revealed next week. The decline in second-quarter vehicle shipments has been attributed to production halts in North America due to tariffs, coinciding with the company's effort to transition to new products in Europe. Several new models are either ramping up production or are soon to become available in the second half of the year. Additionally, the company reported that North American sales were further impacted by a reduction in fleet sales. Looking forward, executives are confident in the potential for sales growth in the latter half of the year, particularly in the lucrative U.S. market, where new models like the revamped Jeep Cherokee SUV are set to hit the market. Other gasoline-powered models and variations are also being reintroduced, taking advantage of the relaxed emissions rules under President Trump's administration. In the U.S. market, Stellantis has faced a challenging second quarter with sales declining by 10%, even as most of its competitors reported growth during the same period. Nonetheless, there was some positive development within its highly lucrative Jeep and Ram brands, both of which managed to achieve slight sales gains. In his communication to employees, Filosa highlighted several new releases in Europe, along with the revival of the Cherokee and Hemi V8 engine in the Ram 1500 for the U.S. market as critical strategies that are expected to yield positive results in the near future. At the same time, he remarked, "We have had to make tough but necessary choices regarding our product offerings where certain pathways did not show sufficient promise for returns, such as the decision to discontinue our hydrogen fuel cell technology development initiative." Filosa expressed his commitment to making 2025 a year characterized by gradual and sustainable improvement, encouraging his team to harness their collective energy and creativity as he has witnessed during his recent visits across the company since stepping into the CEO role. What do you think about Stellantis's direction under new leadership? Are these challenges indicative of deeper issues within the automotive industry, or can the company turn things around effectively? Share your thoughts in the comments.